So I'm going to explain the biggest reason why our trades don't work and how to actually win in the market. So imagine you're sitting down and you're trading, and the market has taken out some liquidity. It has given you a market structure shift, a fair value gap, and you take an entry. And then price is going a bit in your favor, but then somehow it fades and it goes against you. And you're thinking, but I did everything I was taught. I waited for the liquidity sweep. I trade inside the session time. I'm doing everything correctly, right? The thing is, you are still trying to predict where the market is going without any confluence, without any proof. You're just stacking concepts and hoping for the best. The thing is, the market hasn't actually shown you where it wants to go yet. It has just swept some liquidity. And oftentimes the people who enter the earliest in the session are the ones who lose. Imagine this, you sit down, it's New York session in the NQ, and the market just opens, and people think that they want to take a trade like as soon as it opens, instead of waiting like 15 minutes to see like what happens. Because at the start of the session, like, big players have positions they want to add, and it's just too much noise. Usually, not always, but usually it's just too much noise, and people aren't willing to wait 15 minutes to see what's going on in the market first. And once you wait those 15 minutes, you can actually see clearly what's going on. And then let's say we're somewhere in the middle of the range. So people want to trade in the middle of a range. That's completely, that's not the way to do it. So people, let's say you want to go long, and we're in the middle of the range or even lower, and people are like, okay, we're in a discount, let's go long. Like, they try to predict the market instead of actually trading what the market is showing you. For me, like, if I see that the market is in the middle of the range or lower, I don't want to go long. I want to go long when we have displaced clearly higher. Remember, we haven't displaced yet. That's the thing. Wait for displacement, right? And then obviously you can't catch like 1 to 5, 1 to 6 R after the displacement, but that's not what I'm here to do either. One of my best strategies is trading 1 to 2 risk reward ratio. Why? Because I have to lower the risk reward ratio, but I get more clarity in where the price wants to go. And let's imagine you have the session highs, the market has went lower, maybe swept from liquidity, we're displacing higher, and we're close to the session highs. Then you want to be looking for long positions to take out the session highs, or vice versa. Let's say we're going lower and the market is clearly showing a bearish trend, bearish displacement, all of that stuff. And then we get a market structure shift to the upside. And I know that people obviously think that, okay, we have a market structure shift, we have a fair value gap, and I want to go long. That's logical, right? But the thing is, that doesn't work either most of the time. And once you get stopped out of that type of position too many times, you realize that you can reverse engineer the strategy and actually become profitable. So I'm covering all of this in my Discord. I do live market analysis and trades, not trades, but live market analysis every single day. I do trades when I get a setup. That's not every single day, but maybe 2, maybe 3 times a week. I do all of that in my Discord. Link is in the bio if you're interested. But what I do in New York session then is I wait for the market to go lower, like to show me bearish price action. And then I wait for the bait. I wait for people to, because I don't try to anticipate what the market is going to do the whole session, or like, I just try to get this quick move. This quick move is what I'm aiming for. Then I'm done for the day. And that quick move is between 9:30 and like 10:30, the first hour after the market opens, I look for proof of bearish, or yeah, let's say bearish price action. And then what I do is I simply wait for a market structure shift to the upside and a fair value gap, and people think that we're going higher. Then I try to fade the move and go lower and take out the previous swing low where people have their stop losses. That's all I'm trying to do. I wait for the market structure shift, and I wait for it to go a bit higher, and then I scale slowly in. I may add a third of the position first, then it goes a bit higher, then I add the second third of the position, and then a bit higher, then the third, like the whole position is added. Then I try to take the move lower to the swing low. That's it. And I build up my position slowly because I'm not afraid to miss the move. If I miss the move, then I still got something because I added a bit of the position. But usually what usually happens is that I have to build the position slowly. I have to add a bit more, then a bit more, and then it goes down. So on average, I get a really good entry. That's how you, because people are too focused on like just taking like they put the entry, the stop loss, and the take profit too early. Like it's too obvious and it's too, I would say, static. It's not, you don't have any flexibility. You're not, what's the word? I'm not sure of the word, but you get the point. Like dynamic, you're not so dynamic. That's the thing. And the market is dynamic, but you have to observe price action over a long period of time and know what you're looking for. Be more dynamic, be more flexible, and just find something easy, something simple as this, where you know that they're going to take out this low. Because let's say it's 9:30 and then we go lower and we get the break of structure. That's the first low. That's obviously most of the times going to get swept again, because the market doesn't go 9:30, goes lower, then market structure shift, and then boom, higher. That, like, it's not that simple, right? So you know it's a trap. There's something else if the market goes lower, higher, lower, higher. Like eventually it's not going to sweep the next low that easily, but I've seen that this trade can hit TP in like 5 to 10 minutes and you're done for the day. So wait for 9:30, wait for the market to show you some bearish price action. Then when you get a market structure shift higher, wait, think about where you are in the range, all of that stuff, and just back test it and observe. Then you'll know when to scale in, when to add to the position, and you can take a quick trade that takes out other people's stop losses, and that's it. So that's it for today, guys. I wish you good luck, and let's go.